The Toronto area had a record number of houses and condos available for sale last month. How is this all going to play out in our housing market? That's what I wanted to chat about today. My name is John Pasalis. My team and I help buyers and sellers throughout the Toronto area make smarter real estate decisions. As always, if you'd like to meet with me and my team, just click the link in the show notes below or shoot me an email at askjohn@movesmartly.com. So just wanted to chat a little bit about the June stats for the Toronto area's housing market. For those of you who are interested in looking at charts and a more in-depth talk about some of the numbers, I host a live monthly market update this Thursday, every second Thursday of the month. It's, of course, live at noon. You can watch the recording after the fact. We also have an online discussion with David LaRocque about mortgage trends, a couple of my agents about on-the-ground trends. So you're welcome to join that. But today I just wanted to speak to some of the numbers without kind of getting into the weeds of looking at charts. And for me, one of the most interesting things over the past little while has been the surge in active listings. Over the past 3-4 years, we've seen sales volumes remain at very low levels, pretty much at 20-year lows, in some cases 30-year lows. So the market for demand has been very soft for very different reasons. A couple of years ago, the market was adjusting to higher interest rates, like different dynamics in all of this time, obviously not the same reason, but the same end result, very, very soft sales volume. But what makes this year different from the previous couple of years has to do with the number of active listings. When we look at the detached home market, for example, in June, there were 14,000 detached homes for sale. If we looked 2 years ago, June 2023, there were about 6,500. So today's active listings are about 65% above the 10-year average, that they're the highest level since 2008 in the aftermath of the global financial crisis. So we have a ton of detached homes for sale. And the number of listings on the market for condos is very similar. We saw roughly about 10,000 condominiums for sale in June. That is pretty much double what we had about 2 years ago, and double the 10-year average. And actually, in the case of the condo market, it's actually the highest volume of active listings on the market ever. So we're seeing unbelievably soft demand and very, very high active listings. We're in this new dynamic where it feels like, of course, there's this new test for our housing market. It's a little bit different when we have soft sales and soft demand and relatively low inventory. The market can stay stable. But right now we have two opposing forces: very soft demand, very high inventory. And this is gradually starting to put some downward pressure on prices. I say gradually, I mean just over the recent trends, prices down 5% year over year. And we're starting to see this. We're not seeing plummeting prices in condos. Some buildings, some areas are dropping a bit, but we're starting to see some sellers just throw in the towel and drop their prices just to move on from their houses or from their condominiums. So how's this all going to play out over the months ahead? It's obviously hard to say. My instinct is probably the next 2 months is going to be relatively boring. July, August are usually quite boring months in the housing market. A lot of buyers hit pause. A lot of sellers, when they can't sell or don't sell, will often take their homes off the market, relist them in September, assuming they can do that. In some cases, some sellers are really desperate to sell. So we might see a little bit more pressure on prices. But I think the big test is going to be, I think, in September. This is when buyers typically jump back into the market. So we're gonna have to see what demand is like. And it's very hard to gauge that. Of course, if we have a new trade deal with the US that looks like we'll kind of put this trade uncertainty behind us, that will maybe bring a little bit more confidence to the market. But there's still, of course, a ton of economic uncertainty. There's so many sectors laying people off. And if you're in an industry, like construction, where jobs might be vulnerable, those people are going to be a little bit more reluctant to jump in. And if we see a downturn in the economy and more layoffs, will that put even more pressure on the volume of active listings as people get needs to sell and need to move on. So it's going to be very hard to predict where the market's going to be in the fall. But, as I said on this show and even on our live update with David LaRock, we chat about this pretty much every month, that neither of us are expecting this massive rebound. I think that's what everyone or a lot of people in Toronto were hoping. We're not used to seeing the market stay sluggish for a long time. It was sluggish during the start of COVID and then rebounded. It was sluggish for a bit during the financial crisis, then it skyrocketed. So I think this is what a lot of people are expecting, and I think it's extremely unlikely we're going to see a massive rebound in the housing market this fall or anytime soon. I mean, the earliest I suspect would be the beginning of next year, but again, it's hard to predict where the economy will be at that point. So we'll have to see how these trends are. And sometimes it's hard for me to gauge. A lot of times we can see things anecdotally on the ground. Our team, our office is actually, I'd say, relatively busy. We're getting more calls from buyers. We're looking at getting into the market, but it's very difficult to extrapolate that into a broader trend. I mean, this could be, and I talked about this as well with Steve a lot of times on our monthly roundtable, that sometimes, a lot of times we don't know if these are dynamics that we're just experiencing rather than broader trends. And I think we're going to have to see how that all plays out. Certainly, sales cannot be at 20-year lows forever, but we don't know when people will be a little bit more confident to jump into the market, whether that is, a slight increase in demand in the fall, or if people are going to continue to wait till the new year. And I think these are the trends we need to be kind of keeping an eye on, how this balance between supply and demand is going to impact prices and the momentum in the market in the months ahead. If you have any questions, any thoughts on what you're seeing on the ground, post them in the comments below or shoot me an email at askjohn@movesmartly.com.